So, at what point or what price target would you sell Bitcoin?
Well, I think the most important point is there's nothing you could buy that would be a better store of value than
True.
Bitcoin at any price I can conceive of right now.
Okay.
So for example, I think that there's $100 trillion of monetary energy in bonds and stocks and real estate that's going to be debased 10 to 15% a year. If the M2 monetary supply in Europe and the US expands by 10 to 15% for the next 5 years,
Yeah.
then it's not just going to, it's not going to debase the value of the currency. It's going to debase the value of every fiat instrument that collects cash flows in the currency. If that's the case, then that means stocks have to actually grow faster than the rate of money expansion. So you can't buy a stock, most won't. You can't buy a bond, they're not going to yield more than the rate of monetary expansion.
Yes.
You can't buy real estate, the rents aren't going to create faster than the monetary expansion. So I have to find a scarce asset that's scarcer and better than Bitcoin. And between you and me, I already went through 6,500 cryptos, gold, silver, every piece of art, every piece of real estate, everything liquid I could find. I don't think there is one. And the market doesn't think there is one. Bitcoin's going up. It's accreting 100% a year on average every year for the last decade. So no one's found a better store of value. And I don't think, I don't see anything on the horizon. So as a rational person, I have to say that if new facts presented themselves and there was some new development, then I would evaluate it and I would act accordingly. But right now, I think that it's reasonable that Bitcoin is going to demonetize gold. It's better. It's harder.
11 trillion now.
Yeah. So, and if it demonetizes gold, it's going to go up to $1 million, a coin or whatever that number is. And it's probably going to demonetize sovereign debt that's negative yielding. Wouldn't you? Like, who in the world is holding $17 trillion worth of debt that you have to pay money to hold?
Pension funds?
Right. I mean, and so I think it's going to demonetize equities, bonds, precious metals that as a store of value. Like, you should own gold because it's pretty. You should own real estate because you need it. You should own stock because you believe that their cash flows are going to grow faster than the rate of monetary expansion. Buy Zoom with 10 million users because it's going to 1 billion users, right? You can you make a venture investment. You can make an equity investment if you think it's going to grow faster than the rate at which the central banks are going to expand the broad money supply. So there is no price discovery right now in 95% of these assets. People aren't owning bonds because they're going to yield more than the monetary expansion, right? They're not owning stocks because they think they're going to go faster than the monetary expansion. 95% of them won't. Everybody knows they won't. They're just stampeding into those things as a quasi-scarce asset, as a store of value, because the consequences are worse if they sit in cash.
Yeah, true.
And people are stampeding. The ones that are buying gold, they're buying it because it's the only non-fiat instrument that they know that's liquid that they can buy. The real terrifying danger of owning gold and Bitcoin at the same time is, as soon as people understand that Bitcoin is pharmaceutical grade gold with all of the benefits and none of the side effects, and when they look at the chart and they realize that Bitcoin is up 160% and gold is up 30% or something, and Bitcoin is outperforming gold every year for the past decade, and then when they understand it's pharmaceutical grade gold plus big tech. It's all the benefits of big tech if you bought big tech a decade ago, and all the benefits of gold without the impurities and the mining and the hypothecation and the corruption that comes with gold. Once they get that, then they're going to realize that you allocate half your portfolio to gold and half to Bitcoin, you're going to lose the gold. And then it's a double whammy. The gold is going south and the Bitcoin is going north. And you've lost the opportunity of investing the capital in the Bitcoin. So it's just an awful situation. This is why, say Paul Tudor Jones believes in Bitcoin, but his fund is up 6%. Bitcoin's up 160%. Don't you think at some point you would think that if I put half of it into Bitcoin, I'd be up 80% instead of 6%? Being up 6%, by the way, is losing if the money supply is expanding 24%.
Yeah.
Right? And so an under allocation to Bitcoin is losing. And it's a terrifying observation. Like when I thought about gold, I thought, yeah, I kind of like the idea. And I thought, oh my God, everybody that wants a scarce asset is going to look at gold and bounce over it to Bitcoin once they realize that this thing is better. And not only is gold not going to work, it's going to demonetize. And so it's hideous problem. I think that most people don't understand it yet. And we're 1%, right? 99% of the world doesn't get it. So Bitcoin, I'll make one last point. It's a monetary network, which means that when it's worth 100,000 a coin, it's 10 times better than 10,000 a coin. When it's 1 million a coin, it's 100 times better. When it's 10 million a coin, it's 1,000 times better. It's not a fiat instrument. Therefore, it is not valued as the sum of the discounted cash flows over time. There's no P to E. It's not going to delaminate from the P to E. When Apple stock is valued at 1,000 times earnings, your fiduciary obligation as the CEO is to do an acquisition with the stock or go raise money with the stock because the stock is overvalued. And that's what's going to happen. With Bitcoin, when Bitcoin is up by a factor of 100, you can't make any more. And there's no CEO to issue anymore to change and there's no one can change the rule. And the thing only exists to be a pool of liquid monetary energy. And every single time the monetary energy liquidity goes up, it becomes a solution to a new class of investors. So right now, the obvious investors are people with $5 billion in their hedge fund that want to put $500 million into Bitcoin, and they're the buyers. And next it'll be private companies with $5 billion and $10 billion in revenue with 3, 4, 500 million in treasury. And then it becomes small, mid-sized public companies, 500 million, $1 billion. Then it becomes mid-sized public companies. Then it becomes large public companies that want to put 100 billion. Apple's got $200 billion. And they're going to lose $30 billion of that in purchasing power in the next 12 months. Yeah. So they're going to lose $100 billion in the next 5 years if they don't move it into something. Bitcoin, but moving 100 billion into Bitcoin for Apple Computer is daunting right now, but it won't be daunting when it's 5 trillion in liquidity. Yeah. Then you get to small countries, mid-sized countries, and large countries. And when you get to large, and I left out insurance companies and endowments and pension funds. So I think what you're going to see is it's a monetary network that there's no reason why it can't be $100 trillion in the monetary network. And that's, what is that? 300 times more than it is right now? Yeah. So when am I going to start selling it? Well, sell it for what?
Fiat?
Right. No. The point is, sell it for what?
Yeah. Exactly.
I've told people, if you own Bitcoin, the only thing that I respect you for is if you sell it to get married, buy a yacht, buy a jet, or buy a villa of your dreams. Yeah. Buy an asset of passion. Yeah. That's acceptable. If you're just buying a financial investment, where are you going to find a financial investment where you could expect it could appreciate by 100% a year every year for another decade? Where are you going to find that? Right? Where are you going to find an investment that isn't a fiat instrument? Right? The truth is, by the way, the only thing you can find that's not a fiat instrument is probably another smaller crypto, which is 50 times smaller with 50 times less security, with 100x more risk. Otherwise, what are you going to do? Tokenize all the Picassos in the world and buy that? I mean, maybe you can securitize something scarce, but it's show me something. But here's the last point. Once the network crosses $100 billion, it becomes a dominant, mature network. Yeah. So when you're buying these things, the rule of thumb as a contrarian is not. It's not buy something that 99% of the people disagree with. It's buy something that's 99% likely to succeed than 99% of the people disagree with. And so how do you know that it's likely to succeed that 99% of people disagree with? It's Facebook when it had vanquished Friendster and MySpace, and it was 20, 30 times bigger than them in 2012. At that point, it was 95% or more, 99% likely to be the dominant social network. It's Apple when it's 2012, 2013, or Google 2012, or Amazon 2012. They were all 95 to 99% likely to succeed, with 99% of the world underestimating their potential. That's the inflection point. If you'd gone earlier, you might have bought Ask Jeeves or Yahoo or AOL, and they didn't work, right? So there were you could have bought Nokia and BlackBerry instead of Apple, and they didn't work, right? You could have bought Friendster and MySpace, they didn't work. Yeah. So what you want is there is not an example of $100 billion network that got vanquished after it got to that critical mass. That's what you're looking for, $100 billion liquid, scarce, monetary energy network. Now, Mark, name the second one after Bitcoin. You tell me. What's the second best one? It's got to be $100 billion, and it's got to be a scarce, liquid store of monetary energy. Give me the second one.